Ever feel like sometimes you're just drowning in financial news and you're not even sure what it means? Well, today we are going deep, deep into the world of private equity, specifically Blackstone's business model.
Yeah.
We've got excerpts here from their 10K reports from 2020 to 2023. We are going to break down how this financial giant makes its billions.
These 10Ks are really interesting because it's like a company's annual confession. They're laying bare their financial wins, anxieties, everything.
Oh, it's juicy.
It is. It's a gold mine.
All right, so let's unpack this Blackstone money machine. First of all, they manage a ridiculous amount of money.
An incredible amount.
$500 billion. Is that like the GDP of a country, like a small country?
I mean, it's up there.
Yeah.
Their influence is undeniable.
Yeah.
But the way they actually make their money, their revenue model, is very similar to a lot of firms in the private equity world. Just imagine you are managing someone's savings. You charge them a small fee just to manage it. And then, if you make a profit, you take a cut of that too. That's essentially what Blackstone's doing.
So they're charging a fee for managing the money, which I'm guessing is the management fee part. And then they're making a bonus if they're making the investors richer.
Exactly.
Okay. So that's the incentive there.
Big time.
Right. But that sounds like a pretty sweet deal if you can get it.
Well, it is. And they structure it in a way that's known in the industry as 2 and 20.
2 and 20.
Blackstone's fees vary a little bit, but this is like the benchmark you'll hear a lot. A 2% annual management fee on all those assets that they manage, plus a 20% cut of any profits they make above a certain target.
2% of $500 billion.
Yeah.
I mean, my piggy bank savings suddenly seem very insignificant.
For sure.
Okay, but this 2 and 20 model, as lucrative as it sounds, it's drawn some criticism.
Right. Yeah, you're right. Some argue that it incentivizes risk-taking. The bigger the profits, the bigger the payday.
Yeah.
But there's also some tax implications, particularly around something called carried interest, which is a whole other can of worms we could get into.
Carried interest. Okay, we're going to have to table that one because I feel like that's a whole other deep dive right there.
Yeah.
Okay, but so these management fees and performance fees, is that standard across the board for everything at Blackstone? Do they make it on every single investment?
Not exactly. Blackstone, they're not just one giant fund. They've got different funds with different strategies, different focuses, real estate, private equity, lending money. So the fee structure can vary depending on the specific fund, what they're investing in, the risks involved.
It's a little more nuanced than just 2 and 20 across the board.
Right.
Okay, but one thing's for sure. These guys are raking it in.
Yeah.
But with great reward comes great risk.
That's right. And actually, these 10Ks, they dedicate a significant portion to outlining all the ways things could go wrong. The higher you climb on that financial ladder, the farther you have to fall.
All right, so let's not sugarcoat it. What could actually trip up a giant like Blackstone?
Well, they highlight a bunch of risks in these reports, but I think 3 really stand out.
Okay.
First one is market volatility. And I mean, anyone who's looked at the news lately, it's a roller coaster out there.
It really is.
Then you've got the cutthroat world of competition.
Oh, yeah?
Even for a behemoth like Blackstone, it's a jungle.
It gotta be.
And then lastly, and this might surprise some people, employee misconduct.
Oh, wow.
Yeah, that can be a very real threat.
Okay, so let's unpack these, starting with market volatility.
Sure.
You mentioned our listener might be prepping for a meeting, or they just want to get up to speed really quickly.
Right.
So this is probably top of mind.
Yeah.
Now, Blackstone, they've got their fingers in a lot of pies, right?
Sure.
Real estate, private equity, lending, it's a lot.
Yeah. And, just like you wouldn't put all your eggs in one basket.
Right.
Diversification only offers so much protection when the entire market goes haywire.
Yeah, that's true.
The 2021 10K, it's actually really interesting. They go into detail about how the COVID-19 pandemic, forced them to reevaluate valuations, and there was all this uncertainty.
Totally.
So, I mean...
Nobody saw that coming.
Exactly. Even giants can be caught off guard.
Yeah, that's a good point. Okay, market volatility check. What about competition? How is Blackstone holding its own in this, financial jungle?
Well, it's a constant battle, and they're not just sitting back, right? I mean, they're facing pressure not only from, their established rivals, but also these new players.
Okay.
Some of them started by Blackstone's own former, star employees.
Oh, wow. So it's
It's like a high-stakes game of chess.
Yeah.
You got to constantly adapt your strategy to stay ahead.
I imagine talent acquisition and retention has got to be, like, that's got to be key
Huge, absolutely.
in this environment.
Yeah, and, one way Blackstone is adapting is by going beyond just those big institutional investors. They're
Right.
trying to appeal to, like, individual investors, like you and me.
Yeah.
Their recent 10Ks talk a lot about this push into products for individual investors, like tapping into a whole new pool of capital.
It's interesting, that shift.
It is.
It's got to be challenging, though, right?
Oh, for sure.
I mean, dealing with, like, individual investors with their own risk tolerances and, investment goals
Totally different.
must be different than managing, like, a pension fund's portfolio.
Oh, absolutely. You're right on the money there.
Yeah.
Retail investors, they come with a different set of regulations, expectations. It's a whole different ballgame.
Yeah.
Blackstone's really wading into new territory here, so it'll be interesting to see how they handle it.
Okay, so we've talked about market ups and downs. We've talked about fierce competition.
Right.
Now let's talk about employee misconduct.
Okay.
It's kind of a curveball
It is.
because you don't really think about, like, a rogue employee bringing down a financial titan.
Right.
But, I mean, I guess it happens.
It does. It's a risk that every company faces. It doesn't matter how big or prestigious you are.
Okay.
Blackstone, though, they do emphasize their internal controls, their ethical culture. They've even got things like clawback provisions.
Hold on. Clawback provisions. What are those?
So imagine an employee gets, like, a massive bonus, right?
Yep.
Based on what seems like, stellar performance.
Mm-hmm.
But then later it turns out that those profits were based on, like, shady dealings.
Yeah.
Clawback provisions let Blackstone go back and take that bonus back, even if it's already been spent.
Oh, wow.
So it's a way to, like, deter bad behavior, protect the company.
It really just goes to show, even in high finance, human behavior really matters.
Oh, 100%.
You can have all the algorithms, risk models, but ultimately it comes down to the people making the decisions.
Exactly. And that leads into, like, some other really fascinating things about how Blackstone operates that are revealed in these 10Ks.
Okay.
Let's talk about employee compensation and then their unique governance structure.
Okay. Let's start with compensation. Besides those, like, hefty performance fees that we talked about earlier,
Yeah.
how does Blackstone keep their talent happy, keep them incentivized?
One thing that's really interesting in these 10Ks is their, like, eat your own cooking philosophy.
Eat your own cooking.
Yeah. So it's not enough for Blackstone's senior managers to just manage other people's money.
Okay.
They have to have significant personal investments in the same funds they're overseeing.
Oh, wow. Talk about skin of the game.
Right.
Like, that aligns incentives for
Yeah.
sure. Because
Yeah.
then their success is directly tied to the success of their investment.
And it's not just about, like, the financial incentives. It's about fostering a sense of, like, shared destiny,
Right.
making sure everyone's rowing in the same direction.
Okay, so we've got the compensation part down. But then there's this whole other side, which is like their unique governance structure, which
Yeah.
is how it's actually run.
Yeah, it's
So
fascinating.
Blackstone is a publicly traded company,
Yeah.
but it's a little different than how things usually work, right?
Yeah, there are definitely some quirks.
Okay.
One of the things that really jumps out in their 10Ks is just the influence of Steven Schwartzman,
Okay.
Blackstone's founder.
Mm-hmm.
That this isn't your average public company where the shareholders hold all the cards.
Okay.
Schwartzman still retains a significant amount of control through a specific class of voting shares.
Wow. So even though anyone can, like, technically buy a piece of Blackstone,
Right.
there's definitely, like, a clear power structure there.
Oh, absolutely.
Huh.
Yeah.
It does make you wonder about transparency and, like, how decisions are really made at the top.
You're hitting on a really important point, and it's one that comes up a lot in the world of, like, alternative asset management.
Yeah.
The balance of power, the potential for conflicts of interest.
Mm-hmm.
These are all things you really have to think about when you're evaluating any investment, but especially in such a complex world.
Okay, so we've covered a lot of ground. The mechanics of Blackstone's money machine, some of the threats that could really disrupt their whole game, and then we even peeked behind the curtain a little bit at how things work on the inside.
Yeah.
But what does this all mean for our listener? Why should they care about how Blackstone's business model works?
Well, it's not just about Blackstone, right? Their story is kind of like a microcosm of the whole financial world, with its opportunities, the risks, the constant need to, like, adapt and evolve.
Right.
So understanding how they operate, it gives you a lens for understanding, financial news in general,
Yeah.
whether you're a hardcore investor or just starting out.
That's a good point. Speaking of forces at play, we've talked about market volatility, but there's another big one influencing the game.
Oh, yeah.
Interest rates.
Huge.
I mean, they have been anything but predictable lately.
Tell me about it.
So how does a firm like Blackstone that relies so much on borrowed money, how do they deal with that?
Yeah, it's a critical factor for sure. And their 10Ks, especially the recent ones, they're very upfront about like the potential impact of rising interest rates.
Okay.
Think about it. Like when it becomes more